Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com. If you enjoy our show, don't forget to help us out by subscribing to this podcast, sharing it with a friend, and providing us with a review on iTunes. Check out the show notes below for the link. Thanks, and enjoy the show.
Today I wanted to talk about the end of the Big Four accounting firms again. We've covered this concept in the past, but before we talked about the possibility of the Big Four accounting firms going out of existence because of a scandal, like the KPMG South Africa scandal or the Deloitte cyber attack. Today, I wanted to talk about how they might go out of business because of competition. Now let's step back and see how this happened in other industries. One example is Amazon. Amazon basically came in and replaced multiple industries. They replaced the book retailers like Barnes & Nobles, and they're beginning to replace retail stores like Walmart and fashion companies like The Gap, etc. Then there's Uber and other car-sharing apps that are replacing the taxi and car service industries. There's also other companies like Tesla, which are currently challenging the car industry. And lastly, there's Apple. And Apple entered and crushed the smartphone and mobile phone markets. What these companies all did is they came in and they challenged large companies within established industries. All these industries had major players that dominated the market before these companies arrived. In Amazon's case, it was Barnes & Noble. In Uber's case, it was taxis. Apple challenged BlackBerry and other phone makers. And Tesla is challenging car companies like Toyota, Ford, and Chevy. And all these companies are disrupting huge established markets. And I want to take that same kind of thinking to the Big Four accounting firms, because the Big Four accounting firms are seen as huge stalwarts in accounting. And many people think they can't be challenged, and that if you want an audit, that you have to use them. So I wanted to think through how they might be disrupted one day. And I think I found the chink in their armor. All of the firms are currently trying to adopt what is called a one-firm approach when they go out and market to clients. What does this mean? It means that when they go to a client, they don't want their people to only sell advisory services or only sell tax services or audit services. They want to be that client's one-stop shop for all professional services. And this goes back to what we previously said in other podcasts, where all of the accounting firms don't want to be known as accounting firms anymore. They want to be known as professional service firms. They want their clients to go to them whenever they need help with marketing, accounting, management consulting, implementing new technological solutions, whatever professional services that clients need. That's what the Big Four accounting firms wants to be. And I think this is becoming more important to accounting firms as technology comes of age. They see that technology has the ability to one day replace key services, that they need to be as valuable as possible to clients in order to differentiate themselves from technology. In order to understand this, you have to understand how the accounting firms work. They are built as partnerships, as you probably know, with people that own them, known as partners. And the highest position in the Big Four is a partner. When people make partner, they are given revenue goals to support their partnership interest. And what normally happens is that these partners only care about their partnership interest and making money for themselves. They don't care about helping out other partners support their share of income. So they don't care about making that partner make more money. In other words, a tax partner doesn't worry about making an advisory partner money. So what happens is when the Big Four go out to market to clients, they operate as different teams and different businesses. And sometimes one firm can be out at the same client with different partners, and the partners won't even know that they're both out there. For example, an advisory partner can be out at a client like, let's say, General Motors to help them with accounting advisory. And there can be another advisory partner from the same firm out there helping that client implement cybersecurity controls. And neither of them will even know they're both out there at the same time. Now, what this means is that the Big Four are missing out on revenue and giving their clients a good experience. If these partners all looked out for each other within the same firm, they could learn the background of their client and accumulate that and learn about their client's value chain and value profile. And they could also learn their client's problems and find the right partners to address them. But partners within one firm don't do this because they are worried about themselves. And part of this is due to the Big Four being so bloated and large and also regulated. There's so much bureaucracy that they have to follow with setting up an engagement and billing for the engagement, but there's no system for rewarding partners for finding new revenue streams at a client for other partners. What this means is the firms go out to clients one partner at a time versus presenting multiple solutions as one firm. And that's why these big fours have started adopting this one firm slogan. So whether you want to one day work for the big four or you currently work for them, make sure you understand this one firm approach. Now, what does this mean as far as disruption? This means that there's potential out there for a smaller firm that doesn't operate in the old partnership model like the big four to come in and disrupt the marketplace if they can present to clients as one united firm, or there's also potential for a technology firm to displace them. If there's a technology platform that can help clients with organizational structure, accounting systems, and tax systems, and templates for best practices, they can really stand out. And they can easily replace the Big Four. The Big Four's biggest problem is their size and their operating structure. Their bloated size and everyone for themselves partnership structures won't allow them to pivot. If a smaller, more agile firm comes in and starts providing amazing service to clients as one firm. There's also potential for technology to come in and start replacing things like audit services or tax services. And there's potential for even artificial intelligence to come in and start replacing some of the things that the Big Four do and leave them in the dust. If the Big Four can't differentiate themselves by providing a one firm solution for all professional services, then they leave the door open for technology and smaller firms to pick off their work streams one by one. For example, technology could one day replace what audits currently do for the marketplace. Another example is a smaller, cheaper firm could offer cheap management consulting services. And then a boutique IT consulting firm could pick off IT consulting for the same client. You begin to see how the Big Four could lose a lot of money right now by cheap options and by technology provided by other firms and technology solutions. You can begin to see how the Big Four could lose a lot of money by smaller firms coming in and offering a better price, or by technology replacing some of the services that the Big Four do. And if you pair those two up, cheap technology with smaller, cheaper firms, all of a sudden you start replacing a lot of services the Big Four offer, to where the Big Four aren't replaced necessarily by one firm or one complete technology, but by a bunch of smaller, unique technologies and a bunch of smaller, cheaper firms. In order to see whether the one firm approach takes hold in the Big Four industry, and to stay up to date on all the Big Four news, make sure to subscribe to this podcast.
We appreciate your help in growing this podcast so we can continue to bring you the best Big Four content possible. You could help us out by providing a review on iTunes, sending us an email with your comments, and don't forget to share with your friends. There's a link below in the show notes. That's our show for today. Thanks for listening and have a great day.